Hello, everyone. Thank you very much for joining us for the Bloomberg Year Ahead. We are here for a panel called Reshaping the Future with Advanced Technologies. And we have some illustrious panelists. First of all, Ravi Radhakrishnan from Wells Fargo. He's the CIO of Commercial Banking and Corporate and Investment Banking there in San Francisco. And we also have Mike Demissie. He is the head of advanced solutions at BNY Mellon. And both of our panelists are also engineers, and Ravi is a computer scientist. So they will bring both their banking knowledge as well as their technical knowledge to this conversation today. Thanks for joining us.
Thank you.
So I wanted to Thank you. I wanted to start with some of the use cases that you both mentioned before we get into the overview of the advanced technologies, just to give people a sense of some of the practical things that are happening in the industry right now. So maybe, Ravi, you could start by talking about PPP and robotics, just to give the audience a flavor of one specific thing that's happening in the industry implementing advanced technologies.
Sure. PPP, for those of you who are not familiar with the acronym, is the Payroll Protection Program. So we all know that back in March, April, when the pandemic first started hitting in terms of its impact, Congress passed a small business lending stimulus program, and that's called the Payroll Protection Program. So it effectively allowed small businesses to borrow money under different favorable terms, and there was a streamlined process established for processing and approving such loans. What that meant for lenders like us is the kind of activities we saw in a few weeks was what we might see in a couple of years in terms of the volume and the velocity of that. So I was mentioning in an earlier pre-conversation that we used a combination of different digitization technologies. So we used e-signature for capturing the signatures on the forms itself. We used robotic process automation after applying some optical character recognition to the application. So there was a bunch of forms that the small business lending customers, clients had to give us. And rather than process them manually, we applied this combination of both a digital customer interface, but also digitization behind it to be able to process those volumes in a very compressed time frame. So we ended up doing what we might do in a couple of years in a matter of a couple of weeks.
Wow. Okay, that's great. And Mike, maybe you could give us an example from your world and your vantage point, looking at AI, blockchain, digital assets world.
Yes, I mean, so, the table stakes is something I would consider automation, right? So, similar to what Ravi talked about, taking something that, people can do, but, technologies can do actually faster, more accurately in a resilient fashion, right? So think of payment processing, for example, or client, service inquiries, that would come to us. You can use the technology to really understand what these requests are, classify them, and be able to actually extract the relevant information so you can take action, right? So, but that's the table stakes. Those are opportunities that you would find, I would argue, in any bank. What is more, exciting now is actually being able to use predictive analytics. So, taking advantage of the unique data assets that you have. For example, our bank, clears trillions of dollars of U.S. Treasuries and mortgage-backed securities, and a small percentage of them, fails to settle every day. But even a small percentage of trillions of dollars is a significant amount. So using predictive analytics to gain insight into whether that particular transaction is likely to fail settling, earlier in the day, so you can take action, can really be meaningful for our clients and really to keep the market resilient as well. And other areas, that we see these type of technologies actually having significant impact is improving the risk, the risk controls that you have that would be difficult to do otherwise. So think of, for instance, fraud detection. You're talking about thousands and thousands, or if not millions, of transactions, and being able to sift through that and identify something that is anomalous, so can be examined better, is really an exciting application for us as well. So really is a very far-reaching from the simple automation to insights to risk management as well.
And Ravi, when you spoke, you also talked about predictive analytics as well as some of the risk parameters and risk controls that can benefit advanced technology. Can you elaborate on what you're doing in-house to improve those areas?
Yeah, very similar to what Mike said. In addition to applying these digitization capabilities, as I mentioned with PPP, we also have several efforts in progress on applying artificial intelligence and other forms of predictive analytics to the data that we have in terms of the various transactional activities, customer related interactions that we digitally capture. So that range for us from personalizing our customers' experience. So what should be the next conversation that we as a bank should have with our customers, right? Of all the different options for us to dialogue with customers in terms of providing the best customer experience and service, which ones, and we look to personalize it to a segment of one, to any of us as a customer and any of our customers. So that's one example. Another example in the risks space is similar to what Mike mentioned. We use predictive analytics in various aspects of fraud monitoring, fraud detection, and even in kind of helping handle kind of once a fraud is detected, what type of kind of activities are the most appropriate to pursue to kind of address that impact. So there's a range of activities with predictive analytics, from personalizing what our customer interaction should be to improving our control environment for eventually a better customer experience.
Great. Okay. And I want to cite a McKinsey report, which talks about the potential value for AI and analytics in global banking, which could reach $1 trillion. I'm interested in which areas you think are most likely to benefit from AI in the short term. The McKinsey report talks about marketing and sales, risk and HR, some back office functions. Give me a sense of what you think is most ripe for sort of AI disruption. Maybe we'll start with Mike. Sure.
It's you would be actually hard pressed to find an area that cannot take advantage of AI. So like we talked, mentioned earlier, in terms of anywhere you have large sets of data, and that you can actually either automate in terms of how you're processing it, or you're talking about being able to uncover patterns. The opportunity is very far-reaching. I would say I think the area that's really picking up more is anything that has to do with predictive analytics. Just gaining insight, whether that is in terms of helping understand customer needs. Just to give you an example, for instance, in BNY Mellon, and asset servicing, one of our largest businesses, we have data analytics service offerings that are helping our clients, anticipate demand of certain products in certain geographies, right? So that is where you can really take, your unique position in terms of the data that you have from the historical data, the pattern that you have, and being able to see, what are the trends and what are the, and actually an actionable fashion. From automation, and that really helps them actually, the clients, to position their marketing dollars and invest accordingly as well. So whether it is marketing, whether it is back office operation is, I think, the table stakes. I think you really should explore that a lot more. And the risk management areas that we talked about, the opportunities are far-reaching. How about you, Ravi? What do you see as the most?
Mike covered Yeah, sure. Mike covered a few areas that are consistent with what we see too. I would make the same point that the opportunities are across the breadth of what we do. So I'll provide a couple of other different examples. Even in IT operations, we are beginning to use AI-based predictive analytics to look at the prior history of where changes might have resulted in failure, or there might have been patterns of outages with third parties. and better position ourselves for where we have to increase our focus even before problems happen. So that's like probably not a very intuitive example, but a pretty powerful one to provide better resiliency and stability of our services to our customers. If you were to look at operations, all the large banks do a lot of reconciliation across different types of activities we do. So applying AI techniques to reduce the breaks from those reconciliations and then learn the common patterns of breaks and kind of fix them more automatically for better straight-through processing is something else that we are also beginning to look into. So the range of use cases is truly very broad, right? From personalizing the experience for a customer to more insights for our businesses so they can better serve their customers, better fraud management, better IT operations, more straight-through processing in back office operations. So there isn't probably a part of the bank that has the potential or is already realizing some of that potential with the AI-based techniques.
Yeah.
Great.
If I can add to that, yeah. So it's I think one of the big things that you're seeing now, AI used to be talked about actually outside of the technology companies as something futuristic, right? But I think right now it is here. It is it's the technology is actually mature enough that you can do a lot with it, like we're discussing. So I think you can describe the age that we're in, transitioning from the experimentation to really application at scale. So like Ravi mentioned, you have to actually be set up to really implement these solutions. The technology is mature enough. You just need to make sure you stand up the capability so you can implement it at scale, you can monitor it at scale, you can support it, and not necessarily just do some pilots and POCs. I think that stage, we're past it now.
Yeah, that's great. And I think one of the things we wanted to achieve with this panel was to get beyond the buzzwords and to get beyond that and to show the audience that there is real stuff happening here that you are implementing and there are firm use cases for many of these technologies. One thing I wanted to ask about was repo markets and blockchain. We saw that announcement by JP Morgan, and I just wonder, whether you still see blockchain as a kind of a technology looking for a use case, or whether you think there's a big milestone in terms of using it in financial services. Maybe Ravi, you can go first since you had some thoughts on blockchain.
Yeah, sure. We do think of blockchain as a relevant technology. It's a modern way to look at some traditional problems, and it has characteristics in terms of the trusted network, in terms of an ability to divide units of things we work with, arbitrarily smaller pieces. I think for a while, blockchain was indeed technology looking for use cases in our industry. I think now we have reached the stage where there are some established patterns of productive use cases. You cited the JP example. Several other firms, including ours, have either announced or are working on forms of digital cash that are built on top of distributed ledger technology. They could be for moving money within our own networks, which is kind of where we are looking to begin. It could also be creating connected networks across multiple participants, which some of the other industry players are experimenting with. There are also relevant use cases in trade finance and capital markets, clearance and settlement, in terms of capturing more efficiencies and modernizing some of the traditional ways in which those have happened. I do think that there is more to come in terms of scaled use cases across a broad range of financial services. Some well-established patterns, some very relevant domains identified, but there's more to come.
Great. Mike, what are your thoughts?
Yeah, totally agree. I think the technology is maturing, and we're really identifying, the right areas. Where we can leverage it. Just adding to the use cases that Ravi talked about. When you're looking at, for instance, in the asset servicing space, how investors actually, get into certain products and get out of it. How you share the information among the participants, that can be easily simplified by using the distributed network. areas like know your customer, right? Like, I mean, things that each of similar banks are doing, the similar exercise with the same clients. That type of information can actually be made available by, again, a shared network. The settlement processes, that Ravi talked about, is really like an immediate opportunity that we see that can be enhanced with the use of stablecoin and digital currencies as well. So yes, so we definitely have shifted now to really actually identify the right areas to apply it. Not necessarily as mature as the AI applications that we talked about, but we believe we're in that pivotal point right now where you start seeing real commercial applications of this technology.
Great. Okay, so I think we've spent a lot of time on some of the potential applications, although there are many others. But talking about fraud, risk management, reducing documentation. But I also want to shift to the business side of technology, which is to understand how these projects actually become implemented in your companies. Obviously, banks are big, highly regulated, have a lot of legacy technology. So maybe Ravi, you could start and let me know about how these new technologies, basically get incorporated into the business and how the tech teams and the businesses work together in order to ensure that you don't have parallel tracks of technology, for instance.
Sure, I think that's a very relevant question for any large organization. When you're talking about these advanced or even innovative technologies, you want to strike a balance between being able to deploy them and scale for the maximum benefit while also allowing for innovation to happen from every part of the firm, right? And not just in one place. So what we have done is a couple of different approaches. In a set of use cases, we typically have a technology team associated with the advanced technology, like with robotics in this case. We also have a business product team that horizontally acts as a center of excellence for that particular technology and its application across all the businesses. And this combination of business and technology team create what we call the platform, partnering with industry providers, building where appropriate, integrating it into useful capability sets. And then we make that available through APIs and kind of modern technology interfaces to the breadth of the technology organization and the business partners to then deploy. So to some extent, we have separated the creation of the capability set and ensured it's scalable, secure, deployable across the firm, and then have multiple places in the company where it could be used internally. We also have a company-wide innovation strategy group, along with some similar horizontal groups across the company, that acts as a place where all the appropriate businesses and the stakeholders are brought in. So there is consistency, alignment, and most importantly, prioritization.
Mike, how about you?
Yeah, there's a lot of parallel to what Ravi described. One thing, we're very intentional at BNY Mellon to make sure we don't have a separate digital agenda or digital priority separate from the business agenda. So the way we see it is, you start with the business outcomes that you want to go after, and the clarity of those outcomes and the clarity of what success is going to look like and how you're going to measure them, and tap into these capabilities to really actually get you there. Right, so how the team is organized, the cross-functional nature of it, and where the priorities actually start with, really ensures that you're not doing some, off-the-side experimentation, but you're actually working on the top business priorities that are either, impacting client experience or bringing, a new product or a new offering into the market as well. So from a structure perspective, that really ensures that a strong alignment. And at the same time, we see a role for central teams to really just make, the development of these type of solutions easier, and not only the development of it, but also looking ahead in terms of how you're going to support and maintain and monitor it as well. These are new technologies, and they require, different type of treatment, once you have them in production as well. So our central teams are, actively working on putting in the right technology stack, the right governance, the right framework. So you're not actually doing that multiple times. That it needs to be done right once, and take advantage of it across the enterprise. So that really allows you, at scale implementation and advancing the true agenda that you care about, as opposed to some off the side experimentation.
And one of the things go ahead, Ravi.
Sorry, just to add on to one thing Mike said on governance, it's not just about governance in the traditional sense. It's also about ensuring the right risk controls are built into the foundational layers of these platforms itself. When we talk about using them or making them available for use and scale, we often probably think about technical scalability, resiliency, modern technology attributes. It's as important in financial services to also be sure that the risk and controls that are required are built into the foundational platforms.
And that's a good segue into my next question, which is you have risk and controls on one side, and then you have innovation on the other side. Where do you stand on the kind of build versus buy debate? Are there vendors outside who are more nimble and flexible and able to push the envelope better than a highly regulated entity? Ravi, why don't you start?
Yeah, sure. I mean, our philosophy on build versus buy is it's situational. We have a playbook that we typically apply, and sometimes we end up building, sometimes we end up buying. We do find innovation coming in through our partners, large and small, in the kind of vendor community. And we have a methodology to integrate those type of innovations from a product capability perspective in the model that we talked about into capabilities that the broader firm can consume. So we don't have a particular bias towards either build or buy here at Wells Fargo. I think we end up using products in a buy sense when it's more commoditized at one extreme, or if it's an innovation that we want to tap into in a relatively quick form. So there isn't like one pattern for that.
Yeah.
Mike?
If I build on that, yes, open architecture is really a core element of our strategy. And so what does that mean? Having a very intentional examination in terms of why are we actually the right ones to build this particular piece. And we very much believe that we're not going to build everything ourselves. We should have an eye to the outside in terms of companies, whether it is small startups that are focused on very particular activities, or some of the largest technology companies that can really bring in the right set of capabilities, so we can get to the market faster. We take that decision making very, very seriously. We do have an organization, a department actually focused on looking after partnerships for that very reason. And it's really as part of like I said, the implementation part of our strategy, and we live it every day. Because it would be foolish of us, to really just assume, especially in these type of technologies, that we're the only ones, who can build this thing. So we bring in the right partners all the time, from the small to the largest.
Yeah, like Mike said. Just to add on to something Mike said, partnerships are very important in this particular context, right? We engage continually with a range of partners, from smaller fintechs to larger technology firms, and even into academia and industry research. We find that being part of this broader ecosystem gives us good visibility into what the trends are, allows us to participate in very targeted activities that we want to go deeper in, while keeping an eye out for innovation signals, for want of a better word, from the broader ecosystem.
So one of the things that I'd like to kind of explore with you is the challenges of implementing, advanced technologies within a big firm. What are some of the pain points, and how do you get over them? One thing that I hear often is that the commercial side of the business often doesn't understand the potential advantages and also the limitations of advanced technology. So, Ravi, maybe you could start, and then Michael follow.
Sure. As with many of the things we do, there are always some challenges to work through. So one of the ones that often comes up is how quickly can we adopt and apply an advanced technology. And sometimes our risk, legal, compliance type processes, because we do have a high bar on third-party technology vendor management. And we have found ways to streamline those interactions while still staying within the principles of what we are looking to do from a risk and compliance perspective. So we don't have necessarily a one-size-fits-all approach. We have a couple of different ways in which we can expedite those interactions. The other challenge we find sometimes is almost the other way around. Commercially, a business could look at a particular technology or the product and get a bit too excited prematurely because it looks very interesting. It looks like it could solve every problem, but the devil is in the details, right? How well does it integrate with the rest of the capabilities of the firm? Does it create kind of operational issues once it's up and running? So we've also learned over the years on how to balance excitement about a potential solution with a phased manner in which we can even test and learn and quickly scale up.
Yes, and totally agree. I think, and looking at a firm like ours, which is really a critical part of the financial infrastructure, right? Like in terms of custodying a significant portion of the world's investable assets, we understand the high bar from a risk and regulatory lenses that actually are in place. So one thing that we take a focused view on is actually demystifying these capabilities, as Ravi talked about, in terms of you see both sides. You see the hype and the excitement around sometimes as this thing being the silver bullet that can do it all, and at the same time people also being very skeptical about actually what you can do with it. So not taking it on face value, but really just as part of your strategy, making sure that we bring in real, accessible, tangible solutions so people can really see it in their environment, what this means and how it can help them and how it can actually position us better. That's how you build confidence. That's how you build credibility, and you can build on that success. And then for the risk and compliance aspect of it, engaging early, right? Like not putting them in at the 11th hour, but really engaging them early so you can actually be part of that decision process to make sure you're well prepared. And just acknowledging this is a new technology, a new space.
Great. And with our final 2 minutes, I want to talk about something that's been in the news recently, which is the ethics of artificial intelligence. And Michael, I think you have some thoughts around this. How do you ensure that in this kind of very important custody and regulated sector that you aren't baking in biases that are unfair and kind of coding that into the future?
Yes, totally. It's a critically important topic. And the way we see it is really as multifaceted. I think it starts out with the team that you have. You need to make sure you do have a diverse team that really bring in different perspectives, when you're looking at a problem, right? So we go after that intentionally to make sure, we don't have blind spots, and we can check for each other in terms of our assumptions. How you actually characterize a problem, how you design it, is a big part of it. At the same, beyond that, looking at the data that you have. Do you have a truly representative, data, that you're working with? The algorithms that you're using, do they actually support explainability? Can you actually attribute in terms of the decision you're making and how you arrived at that? And depending on the use case, right? So just being very intentional, thoughtful about it, from all those dimensions, really helps you, be well positioned in this, critical technology that can have downsides. If you don't, protect yourself against it.